Our next guest says the Fed's strategy isn't just a policy error, but a Ponzi scheme.
A new article explains the new buzzword Web3 and breaks down what the upcoming online era could look like.
Look, I think that a recession is almost inevitable.
Put simply, DeFi gives financial freedom back to the people.
Hey guys, this is the Alpha Drop podcast, which is presented by New Order and focuses on DeFi and macro analysis. I'm Contento. I work on the community/marketing side at New Order, and we're joined by, as always, the two Chads, BlkSwan and Mitch.
Hi, this is BlkSwan. I'm a fund manager outside of being a contributor at New Order and Frogs Anonymous, specialize in derivatives and multi-strategy, crypto, and traditional theme investments. Here at New Order, I focus on treasury management and macro themes.
Hey guys, my name is Mitch. I am focused on researching here at New Order, so pretty much coming up with new ideas for us to incubate in the DeFi ecosystem.
The Alpha Drop podcast is brought to you by New Order. New Order is a community-led incubator DAO that builds startups at the frontier of decentralized finance. We incubate and launch projects while accelerating early-stage DeFi protocols. New Order acts as a co-founder and works directly with teams by leveraging and deploying our network of developers, researchers, and business development experts. Our vision is to create the next generation of DeFi protocols by building alongside future leaders in the space and contributing intensively to innovative projects. If you're a founder looking to work on a new project or a builder looking to get involved in the DAO, head over to neworder.network to get started.
So macro update. So the market right now, from a technical perspective, is, and like I said on the last call, right, we were going to have a rally through the end of August and face kind of a pullback towards September, which, I mean, I honestly, this kind of worked out perfectly. Not gonna lie. I'm gonna give myself a little pat on the back. Pure mean reversion in August. One thing I do want to note is that with August, I'll take an L on this because I thought it would end a little more flat than it did. We actually ended down 4% on the S&P 500, and I believe 13% down on 14% down on Bitcoin. So what's interesting is that Bitcoin, historically August is like a coin flip for it. Sometimes it's up 24%, other times it's down 13% on a monthly basis. But I mean, we're kind of right in line with Bitcoin, but the market really in August kind of took a turn. And what I want to do is I want to attribute is to when that occurred. That occurred roughly the week of the 18th of August. What was significant that happened then is primarily, it's actually just a function of how markets work. So I say this broadly speaking, but most market managers, when they've done a short position for an extended period of time, they generally take profits once they're like 20% in the money or so. If you measure the market from its prior top, we had exactly a 20% drop, right? So what they do is they take their profits, and on taking profits, they're buying back the stock. And that causes the market to kind of pivot a little bit. And that is exactly what you saw. Now, the other part to it is the second place to take profits is, again, once you made a 20% return. Why is it always 20% returns? Well, from a hedge fund perspective, most hedge funds have a benchmark of beating at least 8. And if you can do over that, you get a nice little chunk of change, right? It's not a bad
12%. 12% above 8% is a pretty decent chunk of change.
Oh yeah, you're making 20% on that.
Yeah.
Oh, you're making a good chunk of change. And so the market will usually pivot pretty much in these like 20% rallies each way. And bear market rallies are really the function of short sellers taking off their shorts, buying back the stock, and this causes this kind of slow moving train to start taking off again. Now, what happens is one way they can take off their short position is by buying call options. And what you usually see is just this uptick in these call options. And so let's take Bed Bath & Beyond, for example. Back around the same time when the market bottomed, what was going on right here, and I wish I had a historical chart on how the option volumes were moving, but you started seeing option volumes on a lot of meme stocks, the Apples, Teslas of the world, really start to rocket up. So what was really going on was they were preparing for a potential rebound. When that occurs, you have a market maker who has to step in and readjust their portfolio. So just like these people who provide liquidity on exchanges like Uniswap or Curve, they're always market neutral. They usually have some short positions somewhere, some long and short positions to keep themselves delta neutral somewhere else in the market. If they start removing those positions to be provided the exposure of the upside of these volatile assets, right, that allows the market to just rebound. And that's exactly what we saw. There were no more sellers. They all flipped to buyers, usually catching retail off guard. Once the market starts moving, like we saw, retail are the last people to get in. So what did we see? We saw the Jim Cramers of the world starting to say, I wouldn't, right around here, beginning of August, I wouldn't fade the tech stocks. They're going to rebound. It's going to come back, right? The king of retail right there. It's a telling sign that essentially what the smart money is doing is they're taking profits, they're selling, they're dumping into retail, and they're preparing for the next leg down. And that's exactly what we saw. We started seeing market makers shift their positions. They started going short to prepare for that next leg down right around the week of the 18th. And then we've just been downhill ever since. What spooked the market, though, was Jackson Hole meetings, the Jackson Hole meeting last week, where a lot of Wall Street especially was pricing in that there would be a Fed pivot. Because there's this idea by much of Wall Street, and they understand our situation pretty well, is that we can't afford the market to go down. There's too many factors at play, too much money at risk for the market to go down continuously. But what they didn't count on was Powell's commitment to being the Vlocker of our generation. He wants to hike these interest rates to kill inflation, but unfortunately, the only way to kill inflation is to create a recession or a depression at that. Because the other side of the matter is that if he doesn't hike inflation, we get stagflation. And what the danger in that is, you can think of it as imagine every dollar you spend, instead of going out with your friends, hanging out, every dollar you spend is only on maintaining where you live and the food you put in your body. That's it. A stagflationary market is all about what things you actually need to survive. And that would absolutely slaughter the tech industry. So that's the worst case scenario, is to be put in that stagflationary market. No one spends money on discretionary stuff. It's mainly about, all right, I need to put food on the table, and that's it. You see companies such as McDonald's absolutely slaughtering in stagflation because it's cheap food, right? You start seeing, mining companies doing well because you're still going to need the batteries to power your house. It's the other stuff where it's more discretionary, the Gucci's, the Canada Goose of the world, who start getting hurt. But that's what has fueled much of our stock rally.
Gotcha.
Okay. So when that came out, that the Fed's going to stick to this hawkish narrative, right? A bunch of the market, they reacted accordingly. They're like, oh shit, we're not going to actually cut rates next year. And for anyone who, I just want to clear the air, for anyone who thinks Wall Street's smart, you always have to keep in mind that Wall Street is fueled by a bunch of 20-something-year-olds who are, first off, sleep deprived, powered on Adderall and antidepressants, and they depend on Excel sheets way too much. So we have plenty of tools outside of Excel, and these guys are not in the right, state of mind to really make kind of profound decisions. Their job is to sell, and that's it. So you have to be a perma-bull if you're going to work on Wall Street. And if you're not a perma-bull, you usually don't last very long. So if it seems like it's caught a bunch of people flat-footed, it's because it has. It really has. The market has not priced in yet what the real danger is. And to kind of give you an example where that comes from, we can see it with treasury bills. So this ticker here is TLT. Here we go. What TLT is it measures the 20-year treasuries, and that's generally a nice rate you can use to get an idea of where the market's going. Now with interest rates, the yields on treasuries move inversely to price. So that means when price is high, yields are low. And when price is low, yields are high, right? They move inversely to each other. So something I want to note was we were seeing some weird action leading up into Jackson Hole, where treasuries were actually starting to increase in price, which is saying that the market's thinking, okay, rates aren't going to go any higher. If rates don't go any higher, I want to buy the highest rate I can possibly afford, right? To give you guys an idea of why we would want to buy a 10-year treasury, which, by the way, the rate on the 10 years is like somewhere around 3%, right? It's not very high. Why would I want to lock in that rate? It's because if you have a cash flow you have to make, pretend like, you only have $100,000 and you have to be able to make certain payments per month, however much that is. You have no opportunity to risk that capital. You're stuck in a weird situation where you need to have some sort of interest throughout the year. That's where these fixed income instruments come into place. That's where they're meeting those needs. And so what we saw was people piling into treasuries leading up until Jackson Hole because they thought interest rates in the short term were going to come down a little further. And then now we see a massive sell-off. Today, it dropped roughly 1.8%, which is outside the norm. And it's really indicating that Wall Street thinks rates are going to now continue to be hiked. I would actually argue rates will be hiked another 5-6 times before the Fed finally stops. But that's just saying that we're going to have quite a bit of downside risk until then.
Gotcha. So we're going to have basically the Fed's going to have a period of like quantitative tightening to contract the monetary policy. And they do that by then increasing the interest rates, which would effectively slow the economy's growth. But I think I question with that is how do you ensure then that there's like a soft landing, right? Because is it to monotonically increase the interest rates slowly over time? Is it to have one brief, just increasing it drastically, at one point in time, and hopefully that will, smooth out as time goes on and we can have a soft landing? Or what are your kind of thoughts on that?
So the thing about a soft landing is it means that everyone. So the problem is the narrative of a soft landing only works if everyone's on the same page as the narrative, right? You can't have people calling bullshit, and that's what people are doing. There are people calling bullshit. You're not going to do that. You're going to pivot, and when that occurs, right, you don't have consensus. That's when hard landings come into play. So it doesn't matter how he hikes. It doesn't matter if he hikes if he continues hiking 50 basis points from now on, it doesn't matter, because as long as you have those people who are purely rejecting the idea of hiking, once they flip to accepting it, they're going to start acting that way. So they're going to start selling what they have in order to prepare for a continued hiking regime, right?
Okay.
It's all about expectations at the end of the day. I don't think we'll have a soft landing by any means.
Okay, I have a couple questions too.
Yeah.
So first, a couple episodes ago, a couple episodes ago of Alpha Drop, maybe more, a couple months ago, we discussed like what a recession looks like and what a depression looks like.
Mhm.
And I don't actually remember your stance on like whether we'd go into a depression, but we've definitely, I guess, at this point,
We're in a recession.
been in a recession. Yeah. So do you think that, if there's like 5 to 6 hikes still on the table, do you think that we can go into a depression?
Yes. And why I think that is because of when Powell started hiking. So to be very succinct, so first off, depressions happen when there's 6 or more quarters of negative GDP. It's not the hard and fast like, oh yeah, it's for sure this, but historically speaking and time tested, usually we were in depressions during that period of time. Now what I want to point out is the Fed started hiking late. You don't hike rates while the economy is going down, because the economy can't afford the rate hike. And so this could have been just a recession, but because of the lateness of the Fed, and because the Fed has been telling everyone we're going to be data dependent, which in other words, they're going to react to whatever the market does. So they're always going to be behind the market. They're going to wait until jobs start blowing up, or someone starts screaming for uncle. And by that point, when they pivot, I mean, we could be 2 years into this thing. And I've been measuring this as if this will be a 2-year long global slowdown starting in January of 2022. So I expect this to continue going through 2023, and we'll probably find a bottom end of 2023, 2024.
Wow. Yeah, but so just to like challenge that a bit, with the increased interest rates, say if there's a aligned sentiment from people in the economy, right? So then that could increase the likelihood of having a soft landing.
Yes.
Don't you think then that if that occurs, the only way where we could experience like a really severe economic downturn is through some sort of catalyst, like a major catalyst, like if the war in Ukraine maybe accelerates, if the US has to get involved in that, or if there's pressure from China, some sort of macroeconomic event that then really that I guess
so yeah,
it puts us into that a depression situation.
Yeah, a black swan event like that would definitely do it, right? Most depressions happen because there is a black swan event that occurs. For us, really, what we have on the horizon is and let's look at Western society today, right? We have a society that is globally dependent on countries that are now not wanting to do business with us, right? Western society, including Western Europe, Germany's being, fuck it to Putin, and Putin's coming back at him saying, all right, we'll turn off your gas and power, see how you like it, right?
Mm-hmm.
You're seeing business relationships between countries that are working against Western society start building. So China is now siding more with Russia. Okay. And then the Saudis, who traditionally worked with the US, is now signing deals with Russia as well. So you're seeing this new dynamic kind of take foot. And why that matters is because, the US used to be the global superpower. And now other countries are seeing this as an opportunity of disrupting that. Where that will start affecting everyone is, we can slow down here. We can have that consensus. And that usually does happen. Eventually everyone hops on the same boat, right?
Mm-hmm.
Once everyone's on the same boat, people adjust to interest rates. Yes, prices will be a little bit higher, but we adjust to it. Prices will eventually adjust. But the thing is that the US has very little global infrastructure, very little infrastructure internally to maintain its operations without relying on other countries, right?
currently do not produce enough, not just do not produce, we do not refine enough oil to maintain oil usage inside the US. And there's a difference between production of oil and refinement of oil because you have a bottleneck situation going on. Even though you produce a lot of oil, if it's not usable, which is what the refinery centers are used for, you literally just have a vat of dino juice sitting in your garage, right? It's not doing anything. So we haven't built out any the most recent refinery that was built this year, January of this year, but it was funded back in the early 2000s. We haven't built anything new. And we're closing 3 refineries next year that produce 250,000 barrels a day. An average refinery produces between 4,000 to 300,000 barrels. So we've kind of set up in the US this situation where we are more so dependent on the world cooperating with each other than anything else. So if anything disrupts that, Western society as we know it slowly starts crumbling, right? Why that could happen is we're pushing the policies for that. ESG, for example, the whole idea behind ESG and the World Economic Forum is a bunch of bullshit, right? And like, I do think green energy is great, but you can't just hop into green energy, just cold turkey, quit fossil fuels.
Yeah. What even is the World Economic Forum? Is it just like a bunch of dudes that sit around a table and just talk about what they're going to implement, but never actually implement?
No, they actually implement it. So every major Western society leader's part of it. Biden's part of it. Trudeau's part of it. All these guys, and it's really it was created by this guy called, what's his name, Karl Strauss, something like that. He's some German economist, business head, executive. But they essentially say, look, this is where we want the world going, and they kind of guide it that direction. So their big thing is eliminate inequality, right? Very broad goal, to eliminate global inequality, to switch over 100% to renewables by 2030. Okay, to get rid of, like, they're very lofty goals. Get rid of, housing problems by 2030, like super lofty goals.
And those are pretty broad in general.
Yes. Yeah.
It's very hard to implement something when it's like that broad, right? And there's like going to be different ways for which like these countries leaders want to implement such policies, but like there's so many other factors at hand like that would stop them actually implementing these and reaching those goals.
Exactly. So well, here's the inequality thing, right? How the hell do you fix inequality, right? Because inequality at the end of the day is, that's going to rise. You're going to have some people more ambitious than other people, right? Not saying everyone's not ambitious, but I am saying everyone's has different levels of ambition.
Mm-hmm.
Okay. I've gone to school with people where, like, girls, their goal was to get pregnant right after college. That was their goal. Say goodbye to the career they wanted to get pregnant. That's fine, right? That's where they'll end up. They're trying to get wifed up. Whereas some women, they don't want to get pregnant. They're like, no, I want to become a corporate head, whatever, right? You have different levels of this, and so to get rid of inequality, one way of how they're doing that, and I don't know if you guys are familiar with Adam Newman. Do you guys know who that is? So his new housing project, Flow. Yeah, they buy.
He just raised a bunch of like 300 million from A16Z, right?
Yeah, they did. They raised a crap ton of money, and the whole idea behind it is you don't actually own the place; you're literally renting out a room, right? And you could rent to own, but it follows exactly what the WEF has been saying: is you're going to own nothing and be happy, because who owns it are the the real money makers in the world. They're going to own it. You're going to rent out, essentially be a serf,
and that's how it's going to be.
I thought there was something where there's going to be, he's trying to implement like a profit sharing mechanism, and he seems to be pretty big on crypto, and using, maybe having some crypto as payments for rent, but also having some sort of profit sharing system. I don't know the exact details of that, but I thought that's what he wanted to implement as well.
It's a form of what we call stakeholder capitalism, right? So we use it in crypto. You stake your ETH, you're part of the stakeholders of ETH, Ethereum, so you get some of the fees, right? That's stakeholder capitalism. And essentially you as a stakeholder make the decisions. That's something we've always done. That's why when you buy common shares of a stock, right, you get to make decisions on the board of directors and all that other jazz. But where this comes into play is, well, does your vote matter as a stakeholder if you're a minority? Right? We've seen whales in the crypto industry completely swing votes, right? I mean, just they jump in, the vote goes the other way, right? So you still have that power dynamic at play. They're just kind of virtue signaling, making it look quote unquote better, but you're still in the same shitty situation. And it's a lot of these policies that they're trying to force on people that's causing the problems we have today. So Biden reducing oil refineries throughout the year, right? Him saying we're not going to subsidize oil, or we're not going to or demonizing the oil industry in general isn't helping anything, right? We're now just going to continue getting higher gas prices, because still, fun fact, you can look this up on the U.S. Department of Energy Services, roughly 88% of all energy produced in the U.S. and used comes from fossil fuels. 88%.
Contento, are you looking that up?
What am I looking up?
Never mind.
I have another question. I'm literally
I have a
writing
couple
down.
more.
So
that's interesting. Yeah.
So like if you're gonna quit fossil fuels cold turkey, or you're gonna try to push people to do that, right? It's jarring. It's like taking coffee away from a coffee addict, or better example, heroin away from a heroin addict, right? You have to go through the detox process. And that means you're going to go through a lot of pain. And so is that the best time? Is it the best time to do that when the economy starts struggling? No, it's not, right? You're going to have, it's better to do when things are doing well, because no one's going to care. And that's what we saw the past several years. Like, no one really cared. We were pushing towards this green agenda, but now everyone's getting all up in arms about it, because it's like, well, you're trying to cut the one job that pays me really well. It's not going to work. And on top of that, I mean, that's only one part of it, but the fossil fuel industry also breaches into food production. And so if you guys saw a couple months back, Sri Lanka was having revolts. Holland is going through revolts right now because they're forcing farmers to cut use of fertilizer. Well, it's like 30+% of Holland's GDP comes straight from agriculture. Fertilizer is the reason why we're able to produce the food quantities we have today. So a top-down initiative to cut fertilizer supplies because it's part of the ESG proposal kills certain economies. So how do you...
Sure, same thing's happening in Canada too.
Exactly, right? So how can you... So here's the situation: is we're already in a recession, right? The Wall Street is fighting their hardest to say no, everything's fine, but you have active policies today that are reducing infrastructure investments in stuff that does work, that provides jobs, and also reducing supplies of goods such as, food on the table, oil that we use to get our jobs done. You have that actively being pushed from the fiscal side, the legislation. It's the shift that's going to end up really hurting the economy, in my view. But it's very, it depends on if we pivot from it. I don't think it's too late, but it's definitely not winning Democrats any points.
Yeah, I think that makes sense. I mean, I just want to draw a comparison between this and kind of segue into the crypto markets, in that, when we were in this bull market, seemed like everybody under the sun was buying on margin, right? And we see a comparison to that and say, like, the Great Depression, right? It seemed like one of the biggest catalysts that sparked the Great Depression was, Wall Street was just buying shit ton of stocks on margin, and obviously then that bubble bursts and that affects the greater economy. We saw this in crypto during the bull market. Everyone's buying, crypto on margin. We kind of saw that bubble burst with a couple other catalysts from, macroeconomic catalysts, but also, the Terra Luna situation, for example, right? And then all these CeFi companies kind of going under. But it really was due to, people getting risky with their money, buying on margin, that bubble bursting. But it seems as though now, like, we're kind of on the last leg of those liquidations. So in terms of just the crypto market in general, it seems like it's pretty secure, right? Liquidations occurred, whatever happened needed to happen. So now, the crypto market's really up to the whims of what occurs in the macroeconomic market. Would you say it's okay?
Yeah, no, that's exactly it. And one thing I really want to make clear is that, like, of the new technologies that will come out of this, crypto is going to be the one that makes it. And why that is because we've proved time and time again that a more decentralized option, the more decentralized something is, the better it is at, withstanding certain risks. Take the CeFi, the CeFi blowups in lending versus Aave. We're not seeing Aave blow up, right? Aave's withstood it. So it's because they've automated their process. There's no room for negotiation, no room for frankly, bullshit promises. And so you're seeing people wake up to that fact, and which is why I'm very much bullish on crypto, very much bullish on the technology around it, because that's what the world's going to go to. And this comes back to, I think, the next leg of the cycle. It's not going to be Web3. You're seeing what's going on with Zuckerberg. He's trying to push Web3. Did you guys watch this podcast with Joe Rogan?
I watched some clips of it. Yeah, we're not realizing the full vision of Web3 for a while. I mean, just to be frankly clear, but however, we are seeing, institutional adoption increasingly in crypto and like these DeFi products, which, is obviously a good step, I think, in the right direction. But for a while, say the next 5-ish years, 3 to 5 years, we're going to be in this sort of, Web 2 transitioning to this Web 2.5 space, which maybe is just like this transitory sort of state, right? So it just kind of means the incremental adoption of like Web 3 by these Web 2 companies and users. Web 2 is all about connectivity and like interactivity between like individuals, right? And then Web 3 about decentralization, ownership. So Web 2.5 that we're kind of moving into is a bit of a compromise between the two, right? So maybe that means, giving what we're seeing with NFTs, giving more of those like rewards to the creators instead of the company taking all the profits, like that mechanism of sharing revenue. Also maybe like adding, the ability for crypto payments on Web 2 companies, UIs, right? Like some of those sort of features that are added to these Web 2 sites, I think we're seeing increasingly more. And that's kind of going to then increase user adoption, which will lead us to the next phase after a couple of years, which is, Web 2.5 to Web 3.
Yeah, exactly. And I thought that was a perfect segue too into our main topic of today.
Yeah, I mean, so I mean, just to like a couple sort of highlights that we're seeing in terms of like institutional adoption. It's this past month, the Chicago Mercantile Exchange, right? They launched Ether options, which I think is
that's massive,
huge news. That kind of was like I think people didn't take that news for really what it is actually worth. But that's going to get a lot of these banks to trust, like, hey, we can trade ETH options now, right? Increase volume in the space and create deeper liquidity for ETH. And then, moving forward, I think we're going to see that for some other crypto assets as well. Coinbase adding, staked ETH, right? I think these companies that have a lot of capital, they're going to trust like probably one of these more centralized exchanges before a decentralized exchange. That's just the reality of things. So by Coinbase adding that, you get access to, a crypto product for these institutions to then stake their ETH. I think also BlackRock, they partnered with Coinbase this past month, right? And they have like now this private trust. It's for Bitcoin, right? Is it like?
Yeah, it's Bitcoin. They're going to add Ether soon too.
Yeah. See, sweet. Like, all of these things are kind of leading us into the right direction. And then I'd say, like, lastly, I think, a huge catalyst that we all know about is the merge. Obviously, we don't know how the merge, what's going to happen, but it's coming up on the 15th of September. It's going to be a massive event. Vitalik, I actually saw Vitalik when I was in Toronto. He said, 99.9% energy reduction. We're reducing emissions reductions by a significant margin. With the increase then in yield, these, significantly, it's a like better environmental narrative around this. I think a lot of institutions will be attracted by that post-merge, and we'll see more adoption coming from that.
Oh, I agree. We know Vitalik's getting pretty big on this merge too, thanks to that photo he posted.
Oh, okay. I was like, I knew where you were going. I did not know how you were getting there.
Vitalik got a little bit too excited.
Did you guys buy any of what is it? That
dude, yeah, I saw that. No, I didn't. I saw that though. I'm like, yeah. Any sort of meme in crypto now just gets turned into a token, so somebody can pump their bags a bit.
I know. I love it, dude. God. Oh.
Yeah, no, that was it's hilarious. My Twitter timeline was just filled with just Vitalik and just how excited the man was.
God. Like, oh my God. But bringing it back, one thing I think is that I'm kind of curious of seeing, and I'm slowly losing my train of thought here. Oh man, where was I going with this?
Bit too much coffee.
Yeah, bit too much coffee going through the system. But I have an interesting thought to pose to you guys. So, okay, today we have these centralized exchanges. You got the Coinbases and all that, and then we got the decentralized ones. And a thought that occurred to me while you're kind of going through everything, that people trust centralized exchanges more. What if decentralized exchanges end up being the new dark pools of the next generation of finance? Because like we have these electronic trading networks currently, these dark pools, but it's only used by institutions, mainly because I don't know how to access them, but they use them. Right. What if just the decentralized exchanges become that? So everyone still goes through the centralized exchange, but for those few who know how to access the tech, they just access the DEXs.
Yeah, I think that's an interesting thought. One thing it seems like, with these banks and institutions that are trading at such high volumes, they want to ensure there's privacy enabled. And there's going to be, obviously with smart contract risk and security risk, there has to be, forming like personal relationships with these from the DeFi protocols core team with these institutions. But, I definitely think something like that could occur in the future. We see increasing volumes on these DEXs. Sex is too. But I do think, in the future, these dexes will rival. I mean, they already are, but rivaling these centralized exchanges in a meaningful way.
Yeah.
So yeah, I mean,
But
it's going to take a yeah.
But then how that would kind of assume that that people aren't able to either access these decentralized exchanges or they just don't know how. And wouldn't that be that the more centralized we get, the more enticed you are to learn how to access these tools? Or would this be like a whole new set of tools that institutions specifically would access?
I think that because being someone who's like faced retail, and I think it's important for us all to remember that retail does not care what happens on the back end. They just care something happens. Their money is where it says it is. They just care that, hey, if I press this button, it'll transfer money from my brokerage account to my bank account, or vice versa. That's all they care about. And so, like, what I think that needs to be said is, we can build all these cool tools, but the reality is who's going to be adopting it is the institutions. And then where 2.5 comes in is we show institutions how they can take their business model, throw it onto the blockchain. And then Web 3.0 is creating the interface, in my opinion, is creating the interface for retail to interact with it officially. Because that's really what NFTs did really well, was they gave a face to crypto, right? That Bitcoin never could.
Yeah, that's true. I mean, again, NFTs in general, I think, are a lot easier to understand than crypto.
Yeah.
Right. That's why people are, there's a lot of attraction to that, just because, a lot more people just understand it. But I think, before we, there are some key characteristics and concerns that need to be, talked about before we realize this Web3 vision and improving this user experience and user interface. And a lot of those involve, improved security. I mean, we're constantly seeing a number of exploits and hacks occurring in DeFi, right? There's also technical risks, economic risks, like imbalances through that, users are doing through like arbitrage or flash loans to manipulate at like asset pricing, right? Which is just extracting value away from, all users. And then, lastly, there's like security risks. I mean, private key management, like these are some of the things that we need to develop solutions for, and for like the average person to want to actually trust these systems. Even moving forward, I think a lot of people are focused on developing the next innovative DeFi protocol or whatever protocol it is, right? But that's really limited and bottlenecked by the underlying infrastructure. As the underlying infrastructure innovates, that creates more opportunities for these DeFi protocols to innovate. It's really like bottom up instead of a top down. So, I think we're seeing a lot of advances in terms of infrastructure, like zero knowledge, right? Mm-hmm. So I don't know exactly when this was introduced, but in terms of like the research behind it, but I think people thought like zero knowledge EVMs and zero knowledge proofs weren't going to be implemented in these protocols until like 10 years down the line, right? Like we're already seeing protocols implementing zero knowledge proofs. And for like those that don't know what exactly a zero knowledge proof is, it's a form of cryptography that kind of like keeps the transaction details hidden. So I guess like to give an example of that, it's kind of like say I'm looking at my MacBook Pro right now, right? That I bought from Apple. And I want to prove to you, Brendan, who is the verifier, that I own like this specific type of computer, this Apple MacBook Pro, without revealing any information about the computer itself or, details like how much it costs, right? So how this would essentially work is that I would say to you, I own this silver. I would relay a message that says I own a silver MacBook Pro, but I'm not going to tell you where I bought it or how much I paid for it. You, Brendan, as this verifier to prove if this was true, you reply without knowing any of the details. You reply with a random message and say like you're like looking for a clue almost to verify that I actually have obtained this specific computer. I have this specific model, but you don't know any of the details behind how much it costed or like where I obtained it. So you send that message back, right? Then I would respond to you and sort of verify that challenge message, if you will, and with a message that sort of depends on your message, right? So, and then you verify, okay, this is true. So at that point, the verifier says, I am telling the truth. So I do own this MacBook Pro computer, and you verify that, right? So where this happens, it's really about limiting the amount of information that one party knows from another, but also verifying that that information is true. And we're seeing this with like ZK rollups, right? By doing that and limiting that, you increase the amount of throughput because there's less data that needs to be transferred back and forth, right? And they can be bundled together. So it's said like these ZK rollups can scale, Ethereum by orders of magnitude beyond, in terms of transactions per second, beyond what's already occurring, right? So that's like one example that I think is a huge innovation that's occurring a lot faster than what a lot of people thought would be occurring at this point in time. Another one is with the cross-chain messaging and interoperability. Allowing users to not have to constantly switch what chain they're using to get access to different financial or DeFi products, right? That's like a huge value add. I mean, it's very cumbersome to constantly have to switch from chain to chain. And then, lastly, I would say is, I think like Vitalik has talked quite a bit about this, which is the idea of account abstraction. So basically, it's just improving the user experience of Web3 products. So paying gas and other tokens. Having multi-sig accounts that are socially owned, right? So say if like I lose my keys, I can have family members that can prove like, hey, these are his keys, right? So then I can get my private keys back, right? So some of those things just improve the overall user experience and that are being built through like the infrastructure layer, which will then open up the opportunities for these protocols built on top to actually innovate upon that. And that's where we really see, I think, like mass adoption. And yes, that may be over 3 to 5 years out from now, before we start realizing that. But I think it's coming faster than what people expect.
I actually have a question. I have a couple questions, but I think one of the questions that I thought of earlier kind of goes really well with what you're saying. So do you guys think that the next wave of retail is not going to be on chain? And what I mean by that is like, it might be obvious, like they're not going to be, connecting to dApps like us. They're not going to be like interacting with bridges like us. It'll, I guess, be more of something they won't know what's actually happening on the back end. But do you think that they're going to be utilizing more centralized entities or decentralized? Or I guess that depends on like
centralized. Centralized, just because like onboarding right now is not at a level that it needs to be in order for adoption to occur in decentralized products. The only way to onboard right now is through these centralized entities.
Yeah, and that's an interesting thought, and that
we might have seen the peak of, decentralized retail this last cycle, right? And
That makes sense.
I do think that going forward, all the products will be built using the blockchain, right? And you'll see them working on the back end on Ethereum or some like private Cosmos Tendermint type of SDK, but you're not going to know. It's going to be indistinguishable. You just won't know.
You think that's going to happen next cycle?
I think there's a very high likelihood of it happening. Yes, it's you just won't know, and it'll be seamless. Just it'll feel like you're browsing the internet, and lo and behold, that's where I really see crypto going. Because to Mitch's point, jumping through all these different routers to get onto different chains and whatnot. I mean, I'm sitting there on my ledger feeling like I'm texting back in middle school again. You're sitting there like, and it's annoying. So I like the experience of the web browser that automatically connects with the click of a button. I can get to where I need to go, but it would be so much nicer if I knew everything was secure. I can just hop on my browser, whatever it is. My identity is verified, and whether I think biometrics is going to be huge. I think it's going to be really big going forward.
DYDX.
Yeah, DYDX. And then you don't even need to enter a password anymore. It scans your retina or thumbprint or whatever, right? And you're in, and then you can start doing your trading. Everything's trading, or you're going to purchase something. And really, that's where I see the next leg happening, because once you get that that specific security feature down, just think about how, even if you get your password stolen from a website, right? One of these, I've been noticing a bunch more hacks happening recently. What was that password manager just got hacked?
LastPass.
LastPass, right?
Yeah, I actually use LastPass.
Right. So LastPass, all your passwords are now revealed, and now you have to do something about it, right? And who knows how many websites you have? My Google password manager shows 300 plus websites with all these different passwords I have to manage. If Google gets hacked, I'm fucked.
Yeah.
So having like some sort of stationary biometric, security feature, and then from there you don't even feel like it's different from what you've been used to. It's going to change the game. It really will.
Yeah, and I think that goes along with like the mobile adoption. Like when we start having applications for some of these DeFi and crypto products, that's going to streamline adoption.
And we're already seeing it. You have Solana's come out with a new iPhone.
I don't know. Like, I don't know. The sentiment on Solana phone seemed like a bit wishy-washy. I am a fan of it. I think they are just like, they're pushing the space in the right direction, saying like, if these other big phone companies, if they don't want to do this, like we're going to be the ones that do it. And it's kind of taking the Tesla approach, right? It's like, we're just going to like open source this, we're going to do it. And with the idea that we want the space to advance and we want others to actually adopt this faster than what they'd expect.
Yep. What were you going to say?
No, go ahead. It's okay.
Well, I wanted to point out, Helium, right? They kind of just went. So when Helium first launched their like little 5G box, they were making some good. One, they were making some good money off of it. But if you actually go to their network statistics and see how many people are running these things, they literally have their own network. And I was on yesterday just kind of checking out, because I have a couple of boxes myself. Now they're selling SIM cards. You can get a Helium SIM card now. Plug it into your phone and you connect to the Helium network.
Interesting.
Ooh,
yeah.
Isn't there there's a, don't want to cut you off, but what's that other Pollen Mobile?
Pollen Mobile. I haven't heard of that.
Oh, I think it works similarly to like Helium, a bit different use case, but I think where it connects to your phone automatically through some sort of application. I haven't used it myself, So don't quote me on that, but
I'm gonna pull them up real quick. We're gonna.
But I guess just to add on, and also like kind of big news in a way is Helium is now on Solana.
It is.
Yeah,
I didn't know that.
I think that was announced yesterday.
That I mean that goes hand in hand with their phone, so that's how Solana gets their.
That makes sense. Yeah.
Yeah. Wow. Yeah. Let's see. Where's the? Yeah. So whenever you go buy a 5G box, you can also buy a little SIM card with it now. Plug in. I think it was that one. It's one of these. It was cow chip.
Do you have one of these?
I have one of these Freedom Fi ones. I bought a couple of them. You had to like pre-order them. I wouldn't pre-order it now. It's a little.
There it is. Join the People's Open 5G network.
Yeah. Yeah. This is what I have. So the box I have is this little. Show the box on here anymore.
That's the Bobcat. The box.
Yeah, this little box. And you throw it on top of your house and you call it a day. And it like mushroom clouds over the area. So and it's I don't have a chip. I should probably get a chip. That would be actually kind of nice because the 5G out where I'm at is terrible. But yeah, back in 2020 I pre-ordered it for like $1,000, and now it's like $2,500 to $5,000 to get one of these little boxes.
Yeah, these are cool. Wow.
Yeah.
I mean, I wanted to also comment because like we were kind of setting like criteria for like onboarding retail, and I feel like DYDX is kind of doing that. Like they're implementing some sort of what was it called? What's it called, Brendan, again?
Oh, the biometric.
Yeah, I didn't really look into it, but like that's like going around on the feed today. But yeah, like I think they have their app, they have that going for them. Maybe I thought about this, but it's probably wrong. Maybe we get something where
don't sell yourself short before you say.
No, but decentralized exchanges become centralized exchanges, maybe. But they use like infrastructure. I don't know.
But they have
that.
Well, I think there's a compromise, right? Like there's trade-offs. You can say some would say security's increased also as you centralized, or more people would trust the security. That's probably a better way of putting it. For DYDX's sake, like they're building their own chain, right? So they have complete control over the validators set, right? Which, they're choosing that trade-off for the ability to then like increase transaction throughput, increase the efficiency of the DYDX exchange. So there's small trade-offs there in terms of, being a bit more centralized and decentralized, like also, with their off-chain order book, right? That's, I'd say, like a centralization risk, right? But again, increases the efficiency of the platform. So I guess small tweaks there, but I wouldn't go as far as to saying like these DeFi protocols are becoming completely centralized.
Yeah, no, I think I mean more that's kind of what could happen, possibly.
Yeah.
So like protocols are put in place overlapping with each other to enable the trustless transaction between the decentralized exchange, right?
Yeah.
Okay. Yeah, that makes sense. That would actually be kind of.
It'd be cool.
You gave me an idea.
And then two things, but I think I'm going to go back to what Mitch was kind of talking about regarding ZK rollups. So do we currently have any ZK middleware?
Not that I know of now.
Because apparently like Railgun is kind of suspicious. Like I don't want to say anything more than that, but I don't really know if I'm going to go bridge off mainnet or, onto like ZK sync to do a couple trades that I don't want people to fully know what I'm doing. I don't know if I'm really going to do that. So middleware makes the most sense to me. I mean, maybe Manifold could implement something like that. That would be really cool.
Yeah, I'm not exactly sure. I don't want to say anything. Yeah. But yeah, I mean, that's an honest, like, to a kind of nice segue from that is just, with the ETH merge and ETH going in terms of like this modular tech stack, right? Ethereum also made a huge trade-off with this, right? Like they are saying we are going to be the settlement layer, and we are going to allow other layers to be built on top of us, with the idea that that'll just increase efficiency for the entire network, right? So they're going to have, this execution layer that's just updating accounts, the states of accounts, right? And we're going to have this data availability layer, which is ensuring there's enough data in order for users for their transactions to execute. Then Ethereum is going to be this settlement layer, right? The settlement security layer that's going to ensure transaction finality occurs, ensures this is all secure, this is recorded in a trustworthy way, right? But yeah, I mean, I think something like it'll be interesting to see how this plays out, because I think Ethereum, with they're going to have proto dank sharding, then that's kind of like next step, and then dank sharding, right? They're going to have all of these steps to this, but it's a lot of steps had to occur to get to this merge. It's going to be a lot more steps to get to realize the full vision of Ethereum, to realize that full roadmap, right? So are these other alt L1s going to come in, or even layer 2s, right? Like, are they going to come in and steal like a lot of the volume and market share, I guess, from Ethereum, like as Ethereum's building this out? I mean, that's to be determined, right? But that's an interesting sort of narrative that it's going to be continue to play out for the next couple of years, I'd say.
I mean, I think my last question, I think maybe it's good to close out with what near term we kind of have, like, besides the Ethereum merge, we kind of have the next catalyst, or possibly big news event, or everyone's going to be watching this, including equities, is midterms. What do we think, like, the PA is going to be? I mean, considering that equities or crypto is tracking equities pretty closely, what do we think about PA going into that? That's next 2 months, essentially.
Contento, I just want to say I like how you kind of brought that full cycle.
Yeah, that was cool. let me send you guys. Let me send you guys the picture of what's going on right now.
That was a perfect way to lead into the last segment.
Yeah. This is what is essentially going on right now.
Are you sharing screen?
I'm about to. So I had to. My buddy sent me this picture. I wasn't able to show it immediately. So
okay.
This is what's going on.
Oh God.
This is straight up what's going on for midterms.
Oh my God. I actually sent this to my friend. That's hilarious.
Bro. It's in my opinion, Dems know they're in a shit show. Inflation hasn't gone down. It's stalled at the best. It's still high. But I mean, which doesn't Biden, I forget, Biden has like he has like the worst presidential rating in history or something.
Approval rating?
Yeah, approval rating. Because I mean, come on, man, it's weekend at Bernie's over here. It's ridiculous. It's hey, and you could tell the media is not supporting him anymore, especially when they showed the Hunter Biden stuff. I mean,
I don't think I can give any context to what we're looking at. But basically, but then how does like basically bribing, like with loan forgiveness, bribing everyone with loan forgiveness, essentially, maybe that's not the right wording, but how does that affect,
price action,
if they're actually going to win? Like, if
what if they could use hidden hand?
Right. You got to use it smarter. I look at it this way. So student loan forgiveness. Okay, let's take a step back. Why do people spend money? People spend money because they feel rich. Okay. People feel rich when they have cash flows. Okay. If you ask anyone if they're making $10,000 a month versus they have $1 million just sitting somewhere, not able to access it, which one makes them feel richer? Okay. $10,000 a month, they can physically feel and see it coming in, right? They can spend that. Whereas $1 million sitting off somewhere, it could be in a house, right? You don't feel rich. It's just sitting there. So with this cutback on student loans, some people, this might take out their entire loan. So this will, stimulate the economy. They're going to feel better. They're going to start spending more money. I'm sure you guys have seen those TikToks where people are like, "Oh yeah, I feel great. My $130,000 student debt just dropped to 120," right? So they're gonna splurge a little bit. So you're going to see, if people, and this is where it gets interesting, if people feel good about that, and if inflation comes back in enough that prices seem like okay, that they can go splurge on stuff they like, then you'll probably see some elevated prices going into midterms. Now, here's the other side is that if that goes through, but inflation doesn't come in at all, right? You have the opposite effect going. Now they have more money to spend, but what are they spending it on? They're not spending it on computers. They're not spending it on, Gucci purses or anything. They're spending it on food, and it completely destroys, the intent of that bill itself. It's supposed to try to incentivize spending in discretionary products, and now discretionary products are not having money spent on it. It's being spent on food and energy, and so everyone they still feel poor, and that's just going to continue taking approval.
So basically,
watch inflation.
Yeah.
So basically, in other words, watch what the inflation rate is, and the best way that you can do that is pay attention to what your gas prices are outside, right? Watch
midterms are noise.
Yeah, through midterms. Yeah, pay
But
attention.
midterms are noise.
Midterms
noise.
are pure noise. Yeah,
Okay.
Midterms are pure noise. Thanks for doing that. Yeah, it's they're going to try to do their best, but let's be honest, Dems have lost the House. They're just losing in every turn. Just like how a pendulum swings. If it swings too hard one way, it's going to swing the other way pretty soon. And that's what's going on. You're seeing that changing of the guard.
Okay.
Okay.
Thanks everyone for coming out to this episode of Alpha Drop. This was a good one. I think it was longer than usual.
Yeah.
Thanks to the Chads, BlkSwan, Mitch. Let's go.